If you're into TikTok out there,
then you're a 12-year-old girl.
No, I've been on it, and it is the strangest platform. Paul, have you been on it?
No.
It is incredibly strange. I follow just a couple people. I'm very worrisome that China is just getting all my data, which they probably are, but that's not why you're here. You're here to learn why Oracle is investing in TikTok. I think there's a ton of room to grow in this TikTok if Trump doesn't ban it.
Yeah, so first of all, I think he already did ban it, but there's a guy in one of our group chats, Kevin. You know Kevin?
I do.
Very nice guy. He's obsessed with TikTok. I think he probably sends us 20 TikToks a day.
Okay.
Mikey joked with him yesterday and said, Kevin, if you spend as much time working, Kevin does very well, but if you spend as much time working on your business as you do on TikTok, you'd probably be a billionaire by now.
So what is Oracle and why are they investing in this?
I don't know why they're investing in it, but it was Microsoft versus Oracle, then Microsoft pulled out or something like that. I don't know how it went, but the bottom line is Oracle is a major software company.
Okay.
They're very focused on enterprise software for businesses, etc.
So what we're going to do right now is take the 8 pillars of stock investments, look at the health of this company, and see if it's a buy or a sell or a...
Not on TikTok, but on the company that's investing a lot of money in TikTok.
Right. Now, Paul, what were you pointing at, Don?
I know Don looked like he was going to say something.
Walmart is the second partner to this deal.
Oh, Walmart is?
Walmart?
Oh, look at Walmart coming in high.
So Walmart will get they'll have 7.5% stake, and Oracle will have 12.5% stake.
I get Walmart and Kmart confused. Paul, looking at this, look at the board, folks. Looking at this stock right now, I can tell you right now this is a no buy for Paul. Look how high it is.
No, it doesn't matter. You know that. I think you just set me up there to do that. Well done.
Well, I mean, no, not really. I mean,
I don't care where the stock has gone. I care what's behind the numbers here.
Okay, let's do that.
So let's, by the way, just to see where it is it all-time highs? Yeah, it's at all-time highs.
Okay, pillar number 1.
And by the way, for
Go
those
on.
people out there,
yes,
look at this chart of Oracle over since 1980-something. By the way, Oracle and Microsoft went public, I believe, one day apart.
Okay.
Oracle was one day before. It hit almost $50 a share in 2001. Mm-hmm. It took how many years to get back there? 15 years to get back there.
Wow.
So when I hear people right now say, oh, come on, a stock could fall, but it'll get its back. It took 15 years to get back to its previous high. Mm-hmm. And it's just now, if you bought it in 2001, you would just now be up 20% after 19 years.
And take 15 milliseconds to smash that like button in the bottom right corner.
We are providing lots of free information for you.
Paul and I have been going at this for 2 years, and all we ask
is a like and a subscribe.
Little mouse click if you're on your phone.
2
just
clicks.
Just tickle, just a little tickle right there. Just a little tickle of the thumbs up.
Hit the button.
It really helps us. It helps the YouTube algorithm, which none of us know what that means, but it does
sounds
work.
really cool to say.
It sounds really great. Paul, tell us about Oracle stock using your 8 amazing pillars of investing. Pillar number 1.
What is the first pillar?
PE ratio, which is price to earnings. We want this less than 20.
We want it less than 20.
Well, I know. I was going to say 20% because I always mess up, but it's less than 20.
What's it at?
18.
18.9.
Green check mark.
Okay, it's a green check mark. Doesn't mean it's a buy. It just means, hey, okay, we want it to be less than 20. Next one.
How about the profit margin? Pillar number 2, profit margin over the last 5 years. Wow, 24%. Good Lord.
Yeah, and their gross margin is 80%.
Come on.
What does gross margin mean?
I don't know.
Gross margin means for every dollar, every unit they sell, 80% of it is profit to the bottom line.
Green check mark for profit margin.
So 2 check marks so far.
Cha-ching. Number 3, revenue growth over the past 5 years.
Okay, over the last 5 years, here's the income statement. Revenue, 37, 37.8, 39.4, 39.5, 39.
Okay, not massive growth, but not loss.
Correct. So a company this big, you're not going to expect massive growth. It's very marginal growth. This is probably an equal sign here. It's not great, it's not bad, it's this.
Up and down?
It's just okay, it's fine. I'm not excited about it. I'm not looking at it going, this is awful. I'm not looking at it going, it's great. It's just, okay, it is.
Profit growth over the last 5 years. Go ahead, Paul.
Okay, so profit of the last 5 years. 8.9, 9.5, 3.6, 11, 10.
What do you think?
So if you look up here at the 3.6, they paid a lot of taxes 1 year. They must have sold something off. I don't know what happened, but the bottom line is they had an explanation for that big drop in profit. This is a green check. It's not huge, but it's very consistent. If you look at the previous 5 years, 8.5, 10, 10.9, 11, 9.9. They make an F load of money.
Wow. How about shares decreasing? Pillar number 5 is we want the number of shares decreasing over time.
Okay. Number of shares outstanding 10 years ago. 5, 4.8, 4.5, 4.4, 4.2, 4.1, 4.1, 3.6, 3.2.
Big green check mark.
Big green check mark. They are taking their cash and they're buying shares back. I'm not going to say whether that's good or bad, but from an investor standpoint, if you owned a share 10 years ago, your share gets 40% more of the profit and revenue than it did 10 years ago just by keeping that one share.
It's a great feeling.
It is a great feeling.
Free cash flow, pillar number 7, free cash flow growth.
Seth, what's my next question to you?
What is free cash flow?
What is free cash flow, Uncle Seth?
It's cash from operations minus capital expenditures.
That is correct. Here's what I love about software businesses. They have very little capital expenditures relative to their cash from operations. Look at this. 13.7 minus 1.2 is 12.5. 12.1, 13.6, 13.9.
Wow.
11.6. Okay, so it's decreasing a little bit. This is not I still consider this a green check. No, I'm going to go equal on this one. It has decreased, but look at how much of their cash operations goes to free cash flow. This is a huge number. This gives them the money to make acquisitions, pay dividends, buy back those shares. This is a very healthy free cash flow. Because if you remember from Cedar Fair, when we did Cedar Point Fun, they had a lot of expenses relative to the capital expenses relative to their cash flow. Warren Buffett talks about he likes businesses, and years ago when I first read this, I'm like, I don't get what he's saying. He likes businesses where it doesn't take a lot of capital to keep going. This is a business that doesn't take a lot of capital to keep going. You don't have to spend a lot of money in the business to keep going. Real estate, unfortunately, is a business that requires a lot of capital expenditures to keep going. This is not software business.
I thought his name was pronounced Warren Buffet.
Yes.
How about number 8?
So this is a either an equal sign or a slight green check.
Slight green check?
Yeah, but it's probably an equal sign. Go ahead.
Price to free cash flow over the last 5 years, less than 20.
This is the free cash flow the last 5 years. Add this all together, Seth.
Oh, Lord.
11.6 was this is 24.5, 38.1, 50.2, and 62.7 divided by 5 is 12.5.
Yes, it is 12.54.
Okay, so the average of the last 5 years is 12.5. Now, in the past, we did price to free cash flow of 15 on the 1 year basis. Now we're taking an average of 5 years. Because of that, I'm going to do a higher multiple because it'll be a more consistent number. It won't have as many fluctuations. So I want the company to be selling for under $250 billion. Is that correct?
Yeah.
20 times 12.5. So what we then do is, this is the company's market cap. It needs to be less than $250 billion. So we go back to the main page and see what is the company's current market cap. We want it under $250 billion. It is currently, oh, look at this, Uncle Seth.
Oh my goodness gracious.
This actually might be a buy.
Price to free cash.
It actually might be a buy. It's actually less than 15 times free cash flow over the last 5 years.
Lord and Lord with sugar on top. This is it.
This might be a buy for us.
Paul, we have all check marks and 2 equal signs, and you're loving the price to free cash flow.
Yeah, and I like the margins. Let's see what the dividend is. Oh, the dividend's 1.6%, so nothing terrible, nothing great. The price to book value is a lot. We won't worry about that right now. Return on equity is huge. So these are other things I look at. This is something that, actually, can I do something?
Please do.
I'm going to text Mo.
Please do.
And say, Mo, we got to look at Oracle.
While he's texting our stock specialist, I think this is an exciting episode, Paul.
Yeah.
The only complaints we do get from our friends and fans is that Paul is a little too conservative.
My job is to say no to investments.
Really?
Warren Buffett always says that the most successful people he finds are the ones that say no a ton.
Well, I'll be dead honest. I watch other channels about financials, and all they do the whole damn time is tell the viewers what you want to hear. Buy those crazy expensive stocks because they're growing and they're incredible. And Paul's delivering the exact opposite. It's a turtle versus a hare here because we're taking the road less traveled. And so I would say that a lot of times we do these analysis and it's just always a no. It's a no from Paul, no from Paul. But this is interesting because all of our...
Oh, we've had a few yeses lately.
That's true. Love...
Carnival Cruise Line.
Intel.
By the way, I don't think I was yes on Intel immediately, but I was very close on Intel.
So what's the final take home on Oracle?
I just texted Mo and said we need to look at Oracle because I'm going to look at the 10K now and read the 10K and understand how they're growing. The only concern about Oracle was their revenue. The revenue was like, okay, they're not really growing their revenue. So I'm going to look at it and say, Have they had to make acquisitions? Is this organic growth? These are the things, guys, that we talked about. Put on Don's mic.
Go ahead, Don.
So the one question I have is, with them going into this deal with Walmart
Right.
and ByteDance, is that going to really affect them over the long term, especially with how you're looking at them now? Is it
I
gonna,
don't really care.
Is it going to skew the...
How much are they paying for their 12.5%?
I'd have to look up the...
Can you look it up real quick?
Let me take a look and see if I can
Because
find
this
it.
is what matters. Guys, I don't look at this TikTok acquisition and think to myself, this is the future of Oracle. Oracle's a really large company. You're going to hope the future of Oracle is, as the developing world gets better and better and better, and businesses become bigger internationally, they're going to be the guys that come in and say, hey, we've got your software solutions. They're going to grow as the rest of the world grows.
How much of this goes into the idea of buying TikTok? I mean, remember Facebook bought Instagram for what, $1 billion? It's now 50.
Yeah, it's a lot. I mean, it's a lot.
It seems like TikTok could easily take over as being the next trendy thing if it already hasn't.
Yeah, I don't like trendy things. I like
That's
good,
true.
stable things. Like TikTok, the reason we're talking about it right now is because it's in the news. TikTok's in the news. You know, Trump's sitting there saying, I'm banning it. And then Oracle comes in and says, hey, we're going to buy it. You know, all the invest in it, these things. I look at Oracle as, what am I buying from a stable cash flow perspective? And the other thing I like about this Oracle, their quarter ended in the middle of the pandemic. So we're getting pretty reliable numbers here. You know what I mean?
Yeah.
So we're not looking at going, oh, shoot, we're looking at last year's number. We are looking, part of it's last year's, but we're also looking at pandemic numbers. Here's Don.
So according to the conversation.com, they're saying Walmart and Oracle may pay a combined US $12 billion for their stake in TikTok.
So wait a second. Their
Combined?
stake total or the valuation of TikTok will be $12 billion?
They're going to pay a combined value of $12 billion. That's what it's saying right now anyway. This is all speculation because Walmart...
So they're valuing TikTok basically at $60 billion. If they're paying I'd have a hard time believing they're paying $12 billion together.
That's what the article says. But again, a lot of this deal is still under wraps because Trump is also wanting to get a piece of this deal if it goes through. There's still a lot of speculation around this deal.
Listen, if they're paying $60 billion, if they're paying $12 billion, which means Oracle's paying $8 billion of that, I have a problem with that. That to me is a lot of their, that's it. They're taking away 9 months of free cash flow to buy a fad stock right now. I don't like that.
We'll do 7.5%.
Yes, so 20% for at $12 billion is a valuation of $60 billion.
Yeah.
Right? I don't like that. That bothers me. But we'll see. We'll look into it more. But I look at Oracle saying, I'm not against Oracle. I mean, look at this, guys. In the last 10 years, they've made $100 billion almost. That's a lot of money. This is after taxes, by the way, people. It's a lot of money. What their free cash flow is insane. This is great.
Thanks for joining us on the Everything Money channel. Like, subscribe, turn on those bells. We go live every Tuesday at 11 Eastern. And so you can jump on with us, talk about stocks.
Minutes.
That's right. You can jump on with us, talk about stocks, ask Paul direct questions. We're going to be doing this more and more. I guarantee Paul will be doing this twice a week. And I'm really loving the noon time slot maybe as we move forward. Don, we got to talk about that. Maybe a Tuesday, Thursday at noon. But regardless, we go live to take your questions every Tuesday, 11 a.m. Eastern. Thanks for following Paul and Seth on the Everything Money channel.